Hi, I'm Nicola Mawson with a bumper edition of Money Minute, the last one for the year, as I look back at the big financial news of 2010. Looking back, Data bought, Ferret folded, Cipro shambles, Eclipse collapse and PayPal lands. The biggest buyout the local IT sector will see for some time was one of the highlights of the year. Japan-based Nippon Telegraph and Telephone Corporation bought out Dimension Data for 24.2 billion rand. Mid-December will see Data end more than 20 years as an IT stock on the JSE, and the sale sees the bourse lose the IT company with the biggest market cap in the sector. Dimension Data was listed on the JSE on 15 July 1987 at 11 AM at a price of R1.50 a share, which raised 7.5 million rand. The company then listed on the London Stock Exchange in July 2000. The share price last closed at R13.05 before trade was suspended forever. Once the darling of the stock exchange, Data shares surged to 70 rand at one point in late 2000. Then the dot-com crash saw Data stock fall to below 2 rand a share in 2003. One of the biggest casualties of the recent recession this year was Ferret Enterprise Solutions, which was Ferret's biggest unit until it was put into liquidation in mid-year. In May, the company announced that its attempts to raise a much-needed 60 million rand to cover operating expenses and implement a turnaround strategy had failed. It applied for liquidation of Ferret Enterprise Solutions after its efforts to raise rescue funding, swapping shares for cash, collapsed. Enterprise Solutions was the company's biggest revenue spinner, as it accounted for 678 million of Ferret's entire revenue of 731 million for the year to June 2009. Ferret still has operating entities such as ICP, or Intercompany Processes, which turned over 9.3 million, and Ferrymed, which made 10,000 rand, and its e-business group, which accounted for 52 million in revenue in the 2009 financial year, the last year its reported figures for. So far, it's not clear what will happen with these entities or with Ferret's status as a JSE-listed company. The company's Intellectual Property Registration Office, or Cipro, had a particularly challenging year during 2010. A 153 million rand deal to implement a new, desperately needed enterprise content management system was canned after tender irregularities were uncovered. Cipro needs the system to cope with new duties that it will have to perform when the updated Companies Act comes into effect next April. Implementation of the overhaul stalled when the deal with Vela IT was canned. Vela IT then took the DTI to court to have the contract upheld and has agreed to a confidential settlement after the Pretoria High Court judge ordered both parties to go and solve the matter. However, it's still not likely that the office will be able to move forward with the much-needed system because there are sticking points with the settlement. As a result, Cipro won't be able to cope with the new act and the economy will suffer. Cipro has also been slammed after being hit by several incidences of fraud perpetrated on its database, including the recently well-publicized hijacking of Kalahari resources. The state of its database was questioned after a recent wide-ranging cleanup resulted in 750,000 companies being deregistered in one day. One of the stories that garnered much attention on ITWeb this year was when Eclipse Network folded, leaving about 300 staff members without jobs just before the Easter break. Eclipse owed creditors in the region of 50 million rand when it was put into provisional liquidation. Its largest creditor, MB Technologies operating entity Tarsus, was blamed for the company's demise through comments posted by staff on ITWeb, a claim the company refuted. Eclipse started trading in 1981 and had 13 outlets across SA when it went under administration. It called itself an IT reseller, an ICT solutions and service provider. Its offerings spanned infrastructure, data center solutions, outsourcing, and related services. The company's finally been wrapped up after several failed attempts to find a white knight, but I don't think this is the last we'll see of that story. PayPal landed in South Africa in March after First National Bank inked a deal with the US-based payment processing company. The official launch of PayPal, shortly before the FIFA Soccer World Cup, made it possible for South Africans to transact with 81 million PayPal account holders in 190 markets and 21 currencies around the world. News of PayPal's arrival was, however, first broken through Twitter in February, when tweets started flying that FNB was bringing PayPal into the country and would unveil the service in April. At the time, FNB wouldn't confirm the rumour, despite a tweet from an FNB executive saying, "Can anyone say cat out of the bag?" and It's true, but I wasn't going to put a public launch date on it. FNB's exclusivity will run out at some stage, and PayPal's success in South Africa has yet to be measured in quantifiable terms. It'll be interesting to see if other banks also offer the service. Well, those are the stories that made it big this year. Thanks for watching, and I'll be back on the first full week of January. In the meantime, as always, feel free to mail me any questions, and there are many more news stories on www.itweb.co.za. Have a great festive season break.